Hey traders, welcome to Charts and Coffee. I thought I would start off the session, and this is my Twitter feed. I actually really like Twitter. It's the cocktail party out there, regardless of whether you're on it or not. It's lots of interesting input, and I thought this was a great one. And presidents don't control the market, right? And I thought this was a really great chart because inevitably, there's this thought that there is a bigger picture. There's some sort of trade that needs to be put on because of the election. And I love this. All right. This goes back to 1901. This is 2024. The growth of $1 in the S&P through a century, actually in a quarter of presidential cycles. Right. And so that's my answer today. If anyone has an election question for me, that's my answer. That's the only answer, right? Because it's not a trading event, right? It's just really not a trading event. It's a volatility event. And if you want a volatility event, guess what? Stay tuned, because tomorrow we've got then, of course, the election results. So it's really not a Tuesday trade. Wednesday, we'll see what happens. But Thursday, we've got a little thing called the Federal Open Market Committee, the folks who actually control, and influence in the greatest way lending rates, borrowing rates, right? And so, that's where my head's going to be at today, managing a handful of positions that we do have. So, as is the tradition here in Charts and Coffee, and we do this every evening, Monday through Thursday. Friday, I sometimes will push it to Saturday, but markets are closed. Sometimes I kind of call it a weekend as quickly as I can, but let's see what we have here. So boom, boom, boom. All right. So what we have as of today, very naturally, we've been reducing the exposure to trades to risk, knowing what we have coming up this week. We have that post non-farm payroll environment Friday. Then, of course, we talked a little bit about this on Sunday, whether that be the weather affected Southeast, whether that be the Boeing strike, which you could really see in the manufacturing numbers of NFP. But regardless of that, we roll into Monday. We know we have the election on Tuesday, election results Wednesday, and then Thursday we have the FOMC. So yeah, the FOMC's moved out by a day. This is what I've got. Now, this is a stark contrast to what we've been doing through October, which has been pretty active. Why the shift? Because I want to free up, right? I want to free up some cash. I want to free up some mental and literal capital so I can get ready for trades that are going to be setting up later on this week, which means I'm hanging on to just a couple trades right now that are not working as well as I'd like. They're not hitting T2s. They're really, in some situations, not even hitting the first target yet. But we're in the no man's land between I'm in, but I'm not stopped out, but I don't have my first target yet to move to a break even. These are basic things that we do in the Sector Secrets Mastery. And the only trade that I put on yesterday, and I kind of thought to myself, gosh, it better be a pretty darn good setup to be able to enter into today. We took a Wells Fargo trade yesterday. So very naturally, we're reducing the activity, freeing up some cash. The flatter your book is, the more open your mind is to trades, because the more busy your trading book is, the more busy my trading book is going into a major event, well, that's bias. I'm going to have an opinion that then I'm measuring as far as whether I'm right or wrong. And it's sort of like when there's an accident on the street and everyone just has to slow down and look at it, even though it's not even remotely in their lane or even on their side of the highway. We can't help ourselves. And so I think to myself, what are those biases that are going to influence trading decisions that may not be for my account's greatest good? And for me, that means getting as flat as possible into events like this. All right, so this is what we've got, right? If you have any questions, let me know. And got a question here. MU, sure. Micron. Well, actually, let's do it this way, because this is the way that we do it in the mastery. And if you're wondering, Rod, it does seem that when you're looking for opportunities, you don't use a scanner of any sort. I do not. Nothing wrong with it if that's the way market clarity is for you. For me, this is how I define market clarity: index, sector, stock, index sector stock. I want to find a strong or weak, but usually strong. Uptrends are easier to trade. I want to find a strong index. I want to find strong sectors within the index, right? And then I want to find strong stocks within either that index or sector. That's alignment. I can't really do that if I'm looking at stocks that are scanned for some sort of indicator criteria, because we're really looking at, a lot of folks say relative performance, right? That's a common statement, right? Relative performance. But what does it mean? Performance. Okay, that part's easy. Is it strong or is it weak? What's the performance? But what does that relative mean? Relative to what? Right? Relative to what? And I think that's the most important thing that, sorry, I've got my little brain light on right now. I don't know if that looks weird on the camera, maybe a little bit. If we have a relative performance look at the market, relative for me means recognizing that the entire marketplace is dominated by high concentration weighting, which means a very small number of stocks have a broader influence. And then I want to know how they're performing against each other. And that's the secret of sector secrets, the not so secret. That's the way we think about watch list building. That's the way we think about building that next set of trades. So if I'm looking at MU, I've got to compare it to other stocks within the SMH, right? So what is that liquid place that all these stocks like MU congregate, and then I compare them to each other. I have to say there's probably not a whole heck of a lot that I like in this group, but if there is one thing that is a standout, it's NVIDIA. So why? One, I'm going to look at the labels, these trade flags. I want to know that we have maybe some bullish momentum, preferably, and far more important than momentum is trend, right? Is there a trend here or not? The other thing that I'm going to look for is the consistency of the green candles. So I'm going to go with NVIDIA first, right? I'll look at something like Taiwan Semi, probably second, and then maybe Texas Instruments, and then MU. And why MU say last? Because while it has, and you could probably throw Intel in there as well, MU has a nice steady string of green candles, red. That's going to put it down a couple notches in terms of this top tier look. What's top tier? Not really. There's no top shelf, top tier here, right? That's going to be NVIDIA based solely on the consistency of the green candles. And then that's where, say, Taiwan Semi and Texas Instrument might come in a second, right? So nothing wrong with MU, but for me, there are better setups with the probability of moving higher. Let's face it, SMH is struggling. SMH is absolutely struggling because of the red candles. Those red candles are not the traditional Japanese candlesticks. So for those of you that are wondering, gosh, Ron, there's a lot of colors on your screen. It's easier for me to simplify traffic light simple. You go anywhere in the world, other than maybe having to drive on the other side of the road. Green, yellow, red, or some variation of, right? We all know what those things mean. So I think, how do I take all the inputs, all the more complex calculations that I like to track, and then reduce it to a color, right? And you'll notice there's 6 shades of colors on my screen. There's a lighter version of green, red, and yellow, and there's a darker version of green, red, and yellow. Because one of my pet peeves when I was experimenting with color-coded candles was that the color-coded candles would not differentiate between an up and a down close. I still want to differentiate between that, so we use a different shade. The other thing is, the candles are not green because they're up. The candles are green because they have the criteria of bullishness, and they have the participation of bullishness, right? And so when I look at red candles, say on the S&P, that's the participation of bearishness. But if I dig a little bit deeper into the S&P, the financials look great, right? The financials look fantastic. And that's where, if I'm looking at your question there, Pierre, about Micron, if I'm going to compare it relative performance, if I'm going to compare it to what's happening at the top of the food chain, for example, in the NASDAQ or the S&P, there might be better individual sectors, there might be better individual stocks in that group that I want to focus on. So let's take that next step, right? And by the way, this work that we're doing right now, right? This is what we do in the mastery. I think a lot of folks think a trading room is just about slinging trades, as if we don't get paid for activity, right? We get paid for, frankly, getting in low and getting out high. We get paid for effectiveness, not for activity. This is a results-based economy we live in as traders, not a time-based economy. Putting time in the market charts, they could care less, right? Are we right or are we wrong on our trade idea? So in order to be, well, frankly, right more often than I'm wrong, and to get a follow through of being quote unquote right, correct, right? The idea is to find things that have the most probability, because that's all we can ever focus on, of follow through. And that's where most of my time is spent. What I trade is more important than how I trade it. A momentum trader can make money in an uptrend. An exhaustion trader can make money in the uptrend. The thing that both of them benefit from is the uptrend. Find those, trading gets a whole lot easier and your account tends to grow. Go figure, right? So that's the way I look at it. So if I'm looking at the NASDAQ, there's not a lot to love here. I mean, Netflix is a standout. I want to avoid Apple. I want to definitely avoid Microsoft. I don't hate my money. That's been a dumpster fire. I actually have to avoid AVGO, which has been a pretty good looking name for some time. I also want to, for now, avoid Meta. I have some red candles there now. Tesla's okay. Google's okay. So there's not a lot to love right now. And just what's interesting about the second half of October is a lot of trends and a lot of clarity that was in place has wobbled out. And if you think about it, it makes a lot of sense. A lot of folks have said, hey, you know what? I'm not going to commit to higher highs or lower lows until we get some clarity from Wednesday's open, who's going to be the president, and Thursday, are we going to continue to see rate cuts? And I cannot emphasize enough, gang, the latter, FOMC, whether Powell sounds dovish, whether we can start to get some clarity on the January and March 2025 meetings. Are we going to see rate cuts? Because we're getting a rate cut on Thursday. I'm not in any way predicting. I'm just talking the data, right? I'm talking my book, which as you know is very scant right now. Talking the data. The quarter point is fully discounted. The next question is, are we going to get the quarter point cut in December? And that's mostly discounted. Very, very likely. Although we'll have more clarity after 2 p.m., 2:30 p.m. Thursday. Then we start to ask ourselves, could the Federal Reserve continue with those quarter point cuts at the January and the March meeting? There's no more meeting in February for reasons I do not know. But that is what Thursday is about. And that is far more impactful. Because as I've mentioned before, where is that great image? It doesn't matter. As much as everyone wants to make something of the election, it does not matter, right? It really doesn't. In the bigger picture, it doesn't matter. All right. So let's see here. So what do we have going on this morning? Not a whole heck of anything, right? Nothing. So let me show you what's going on intraday at the moment and what kind of ranges we're stuck in right now. We'll very likely be stuck in a range for a bit because who wants to stick their neck out? Yesterday was look at the candles on the daily time frame, right? Look at these candles, narrow body. Yes, we have some wicks, but no one's really willing to stick their neck out. In fact, the sell-off on the 31st, the first was an inside candle. Wow, the fourth, you could definitely say it wasn't perfectly an inside candle, but pretty darn close, right? The low does seem to be a little bit lower, but that's, for all intents and purposes, that's an inside candle. And then so far today, the 5th, that's an inside candle. What does that mean? We're trading inside the range of the previous candle. We're stuck in a range and a never narrowing one at that. We're not really going anywhere because we have these events on the horizon. So this is where we are. We're not going anywhere. It's not bullish. It's not bearish. It's nothing. Although one thing I will say, we could say it's mildly bullish because we're trading above the previous session close, something I call the line in the sand. Those of you that took my classes from a few years back, I tend to give things nicknames. Traders love giving things nicknames. And I call that the line in the sand and have for many, many years. And why do we call it that? Because it's a sentiment level that tends to be this line of demarcation between bullish sentiment, so the bullish hemisphere, and the bearish hemisphere. When folks are thinking, I'd rather be short and when I'd rather be long. Finding that rather be fill in the blank is very, very powerful. So that's one thing I'd say is a slight nod to slightly being bullish on the NASDAQ and on the S&P here this morning. But that could change dramatically, right? So I'm not looking for a lot of movement. Maybe into tomorrow, maybe into the close. We could see some interesting stuff. All right. Let's see. What other questions do we have here? So hopefully I've kind of driven home the fact that I'm not considering today or even tomorrow a major trading opportunity. It could be volatility. Thursday, right? Let's fast forward to Thursday where we have the FOMC. That's going to be the biggie. Do we start to finally see the bond market stop the downtrend that it's been in for the better part of 2 weeks, 3 weeks now? Do we start to find that yields are starting to move back up because there's clarity, not about November or December, gang, but about January and March? We have more clarity about the yields for the Federal Reserve, the monetary policy, the target rate probabilities. Do we have more clarity about the continuation of those quarter point cuts? And that's what I'll continue to watch. So bonds might be an interesting one to watch. We've been in and out of gold a lot the last 6 weeks. I wouldn't mind getting back in again. There are a number of sectors that are looking, let's see here. I'll show you what the sectors look like before we wrap up. There are a number of sectors that look really good. There we go. Just even month to date. I know it's not many trading days, but home construction, consumer discretionary, energy, semiconductors, oil and gas explorers, technology, oil services. Almost everything is positive. This is not fear, by the way. Again, if you're asking yourself, how does November start? If most of the sectors are above zero and we're seeing broad participation across really what we could say are disparate sectors, does communications care about basic materials or staples? No, they're different sectors all moving higher. The only ones that aren't, and it's just a handful, are healthcare, which is continuing to be a laggard, metals and mining. Financials isn't as strong as I would like to see in utilities. If I look back over the course of the last month, financials have been really strong. So when I juxtapose a 1 month view of financials versus, say, a 4-day view, this is really just a pullback. Another view you could take immediately in front of the FOMC, and of course the election, is where are we sitting in the last 5 days, which sort of straddles the whole little bit of a look of the very end of October, which was a lot of profit taking, to the sort of optimism that we're seeing through November. Remember, the sell-off that we saw was not a November sell-off. It was an October 3-1 sell-off, right? More trick than treat. But take a look at what's strong. Find opportunities there. And if you're wondering where has money flowed into going into the election, going into the FOMC, look at a 1 month, look at a 5-day, right? Regardless of what big money wants to do, and I will never call them smart money, they're just big, is they can't hide their footprints. Flow is flow, right? At some point, you're going to see evidence by way of volume and inflows and ultimately the trend. So keep an eye on that. Trade what you see, not what you think. And I'll see you tomorrow. All right, gang, be good to each other.